Hey everyone, welcome back to Corporate Decoder. Today, GigCapital7 Corp. GIGGW just filed a current report on Form 8, and I am seeing a key move to secure shareholder support for an upcoming merger. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making a deal with some shareholders to encourage them to vote yes on a big business combination. So what is happening here is GigCapital7 Corp is getting ready for a big merger, and they need their shareholders to approve it at a meeting on May 7th. A lot of SPACs or special purpose acquisition companies like GigCapital7 have shareholders who can choose to get their money back instead of participating in the merger. This is called redemption. GigCapital7 is making deals with some of these shareholders to prevent them from redeeming their shares. These units are made up of one class of common stock and one redeemable warrant, which is basically a right to buy more stock later at a certain price. They had a bunch of these registered with the CC. They also have Class A ordinary shares, which are the regular company stocks. And then there are the redeemable warrants. Each warrant lets you buy one share of Class's stock for $11.5. These were all set up and registered a while back. This filing in 8K is like a quick update filed with the US Securities and Exchange Commission, or SEC it is for reporting major events that shareholders need to know about between their regular financial reports. Today's event is about GigCapital7 Corp, a company that formed to merge with another business. They are announcing agreements with some of their public shareholders. This company, GigCapital7 Corp, is based in the Cayman Islands. It is a special type of company, often called a SPAC, that is designed to find and combine with another already operating business. This is its official file number with the SEC, and this is its IRS employer identification number. Their main office is located in Palo Alto, California, and their contact phone number. They've checked this box saying they might be using the filing for early communications under securities laws. Now, let's look at what securities are registered and traded. GigCapital7 has units, ordinary shares, and redeemable warrants. The trading symbols are GIGGW for the units, GIG for the shares, and GIGGW for the warrants. These are traded on the Nasdaq stock market LLC. GigCapital7 is considered an emerging growth company, meaning it is a newer, smaller company that gets some regulatory benefits. This section talks about entering into a really important agreement. On May 1st, GigCapital7 signed what they call non-redemption agreements with some of its public shareholders. These are shareholders who would normally have the option to redeem their shares, meaning they could ask for their money back at an upcoming meeting. This meeting is scheduled for May 7th, 2026 to vote on a big business combination. This business combination is essentially a merger where GigCapital7 is combining with another company. The other companies involved are Hadron Energy, Incorporated, and MMR Merger Sub, Incorporated. Under these non-redemption agreements, the shareholders promise not to redeem their shares. They are agreeing to hold on to a total of 1800000 ordinary shares, which are called the non-redemption shares. There is a limit though. No single shareholder has to hold more than 9.99% of all the outstanding ordinary shares. These shares, the ones that the shareholders agree not to redeem, won't have any extra restrictions on them beyond what is in these agreements. After a certain date, known as the redemption deadline, these shares will become freely tradable without any special labels. GigCapital7 also agreed that if they make any other similar deals with different investors for this business combination, those deals won't have terms that are significantly better for those other investors than the terms offered to the current public stockholders. If they do offer better terms to someone else, they have to tell these public stockholders in writing, and then these public stockholders can choose to get those better terms too. The actual document, the form of the non-redemption agreement, is filed as an exhibit, which is like an attachment to this report. This section is about disclosing information to everyone at the same time, following what is called Regulation Fair Disclosure. On May 1st, GigCapital7 and the other company involved in the merger put out a joint press release announcing these non-redemption agreements. A copy of that press release is also attached to this report. This is for any other important events that don't fit into the other categories. They are also providing a supplement to their proxy statement. A proxy statement is a document sent to shareholders before a meeting, asking them to vote on certain matters. GigCapital7 had already filed its main proxy statement back on the 15th of April for shareholders to vote on the business combination. This new filing is a supplement to that original proxy statement, providing updated information about these non-redemption agreements. The date of the meeting, the place, the deadline for voting, and the proposals themselves are not changing. If you already voted and are happy with how you voted, you don't need to do anything. Shareholders who own stock on the 15th of April, the record date, can still vote even if they've sold their shares since. If a shareholder had asked to redeem their shares before, but now wants to change their mind and participate in the merger, they can withdraw that request before the meeting. This proxy supplement is filed as Exhibit 99.2. GigCapital7 is a blank check company or SPAC. They are formed to find a business to merge with. Their focus is usually on technology and related fields like AI, cybersecurity, medical tech, and sustainable industries. This particular SPAC, GigCapital7, entered into an agreement on the 27th of September last year to merge with Hadron Energy, Incorporated. After the merger, GigCapital7 will be renamed Hadron Energy Incorporated. This is a standard legal disclosure telling people where to find more information, like on the SEC's website. This is a very important warning. They are telling shareholders and anyone interested to read all the official documents filed with the SEC, especially the proxy statement and prospectus, because they contain critical information about the merger and the companies involved. This is another crucial legal statement. It means the CC and other regulators have not approved or disapproved this deal. They haven't said it is good or bad, or that the information provided is accurate. Anyone claiming otherwise is breaking the law. This section explains who might be considered participants in encouraging shareholders to vote for the merger. It usually includes the directors and executives of both companies. This is a standard legal section included in most company filings. It basically says that any statements about the future, like expectations, plans, or potential outcomes, are not guarantees. They are based on current assumptions and could change. These are statements that talk about what might happen in the future, not what has already happened. They're included to protect the company from lawsuits if things don't turn out as predicted. This is a very long list of potential future events and conditions they are talking about. It includes things like the company's ability to build and operate facilities, develop new products, compete in the market, and get necessary approvals, especially for things like nuclear facilities from the US Nuclear Regulatory Commission. It also covers expectations about financing, the merger itself, and the future financial results of the combined company. They are also discussing future performance, financial impacts of private placements and the merger, and when these deals are expected to close. This is a long list of potential problems or risks that could cause things to go differently than planned. Things like the deal falling apart, legal issues, trouble getting financing or regulatory approvals, changes in laws or competition could all impact the outcome. They specifically mention risks related to nuclear energy resources and their micromodular reactor, or MMM, technology. They also highlight the risk of many shareholders redeeming their shares, which could impact the success of the merger. This section clarifies that this report is not trying to sell securities or ask for votes yet. This is where they list all the attached documents. This is the actual form of the agreement that shareholders are signing to not redeem their shares, the press release that announced these agreements, the additional information for the shareholders meeting. This is the signature section where the company officially signs off on the report, the date the report was signed, the signature of Dr. Avi Katz, the Chief Executive Officer of GigCapital7 Corp. So what is the bigger picture here? GigCapital7 is in the process of trying to merge with Hadron Energy. They're facing a key vote soon where shareholders can choose to get their money back rather than participate in the new company. To make sure they have enough support and probably to ensure the deal goes through smoothly, they've gone ahead and signed agreements with some shareholders. These folks are promising not to redeem their shares, essentially locking in their vote for the merger. This is a common tactic for SPACs to try and reduce redemptions and stabilize the deal. The big question for investors will be how many shareholders ultimately redeem their shares, as a high redemption rate can significantly impact the financial health and future prospects of the combined company. This filing signals they are actively working to shore up support for the merger, which is positive. But the ultimate success still hinges on the shareholder vote and the financial realities of the combined entity. The risk I am watching is the total amount of redemptions. If too many shareholders redeem, the combined company might not have enough capital to execute its business plan. Especially if it involves significant infrastructure development like nuclear energy projects. That is my take. Stay decoded. If you found this analysis helpful and want to see more deep dives into corporate filings, please hit that like button and subscribe. You can also join our Discord community for more discussions linked in the description.